Embark on your civil services journey with Vision IS. Introducing the Delhi GS Foundation Course 2026, turning UPSC dreams into reality. Access interactive learning tools, animations, videos, and an immersive interface. Utilize our tech-enabled student portal for performance tracking and personalized feedback. Stay ahead with daily assignments, weekly mini tests, and monthly revisions. Strengthen your preparation with expert-researched, UPSC pattern study material. Delhi General Studies Foundation Course 2026. Batches start 29th November, 5 p.m., Karol Bagh. 19th November, 9 a.m., Karol Bagh. Take the first step towards success. With Vision IS, success is just a step away.
Okay. So I think till here it is okay. This is a very simple topic. Okay, so this is in news, and that's the reason we are discussing. And for that, first of all, we should understand the growth models both the countries actually followed. I think I missed it. Now give me 1 minute. So the topic is India's stock growth versus Chinese wage growth. Okay, so this can also be linked to the growth models which we followed. Now, so in India, basically we are talking about stock growth versus Chinese wage growth. Now, what is the basic differences between the growth models followed by both the countries? First of all, can you tell me what is the basic difference between the growth models? China followed investment-led growth. India followed savings investment model. Okay. Okay, so first of all, the basic differences, let's try to understand. So India, initially we focused on what model? ISI. What is ISI? Import substitution industrialization. This was the model which we focused. Why did we focus on this model? So basically we wanted to protect our domestic market, or specifically protect our domestic manufacturing. This is what we did. So this import substitution model, in this model, one is our customs duties were on a higher side. High customs duties. Okay, so you're regulating. This is what we have discussed now. So we are regulating. And our industrial policies were regulated through IPRs, Industrial Policy Resolution. And it was focused on license Raj. License Raj is entry problem. Okay, so new companies found it very difficult to enter the markets, etc., and expand in India. This was the problem. But the Southeast Asian countries and also countries like China, in the very early stages, in 60s and 70s itself, they have liberalized, they have removed these barriers for the foreign investors to move into these countries. Okay, so this is a very different model which they followed. So we were more into regulation aspect to protect the domestic market, because our domestic manufacturing was in nascent stage, beginning stage, and we wanted to protect that. But when we observe the other countries like Southeast Asian nations, they have allowed foreign investors to invest, and these investors were also interested in investing because of availability of cheap labor, and basically infrastructure was developed in certain pockets, and they started investing and they started producing. And once they started producing it, they started exporting, and exports became the major aspect of their growth model. But here primarily our growth was driven by consumption. Our growth was primarily driven by consumption. Okay, so these countries were primarily focused on investment. In simple words, it is basically they were trying to increase their net investments. So what is this investment? Investment, suppose if I'm producing an output of, let's say, 100 rupees. In this 100 rupees, if 70 rupees is something like my consumption goods, and 30 rupees is my capital goods. So investment is nothing but the proportion of these capital goods to the total output. Something like investment in this case is 30%, in simple words. Like investment is the proportion of my capital goods to the total output. That means my investment is around 30%. Now, this percentage of investment, or the proportion of capital goods output to the total output, was always higher in countries like China in comparison to countries like India. Okay, though in the second 5-year plan, we came up with Mahalanobis model. Nehru-Mahalanobis? Okay, so in the second 5-year plan, so Nehru-Mahalanobis model focused on what? Heavy industry and basic goods and heavy industries. So heavy industry, we are focusing on capital good and basic good industries. So that was the focus of India during the second 5-year plan. Then import substitution was strengthened during the third 5-year plan, and access to markets was very limited in India also. So market allocation, access to market was very much limited. Okay, so now both had its own advantages. But India's case, our competitiveness was ignored because of protectionism. We did not focus on becoming more competitive. And during this period, PSUs were operating. Though in China also, the public sector enterprises dominate, but it is not that they are not efficient, number one. Okay, so it's not that they are not using the resources well. So there is also a public sector enterprise, but China also believed in market reforms very early. Market reforms, that means you're trying to liberalize at a faster pace, way before India. And on the other side, certain sectors would be completely controlled by government. China controls few things. The government completely controls few things, and government is never going to liberalize them. And there will be for certain segments which are left to the market. This is how China was. India during this period, we believed in PSU-led growth, and this PSU-led growth was highly inefficient. PSU-led growth, heard of this word, right? So PSUs were driving our economy, but this PSU-led growth was highly inefficient. Now the question comes up, when will resource allocation be efficient? Obviously, in market, resource allocation will be efficient. At the same time, protectionism also, to some extent, the state enterprises, etc., were working in China. Both were going together. So what we observe is, by the time of 1980s, we see that India was richer than China. Now the whole challenge started after 1980s, 1983, 84. That means, is it that our LPG policy failed? Or is it that we did not adopt to LPG effectively? What are the problems, etc.? That means after 1991, India started slowly moving towards market, right? But from there onwards, if we take the journey of China, then China's incomes started increasing exponentially. And today we find that China definitely is way above India with respect to its growth. So that means, is it that India failed with respect to its market dynamics is also one question. So here, if I have to see here, India's nominal GDP per capita, and this is China's nominal GDP per capita. And then you have India's PPP, purchasing power parity, and China's purchasing power parity. Okay, so here you can see the yellow line here, you can observe here. You can see how China was, and then see the growth in China or the jump in China here, the way it went, the Chinese PPP, if you can observe. So the way it has increased, and now the nominal as well. But India, if you see India's PPP and then India's nominal, you can see, can make an observation here. That is basically this jump which you see is started off picking up around 1995, 96, 97, and from that period onwards. That is the period where India also came up with its LPG reforms. Okay, but China has liberalized. The problem with LPG reforms is, if you come up with liberalization without adjusting the systems, so the institutions in India have not adjusted to LPG policies. Okay, so it takes time. For example, there was Harshad Mehta scam, or the SEBI did not have the experience, RBI did not have the experience. That means the regulatory institutions did not have the enough experience. We were forced to implement LPG because of BOP crisis. So therefore, the systems are not still in place, and you went ahead with reforming stock markets, allowing foreign institutional investors, etc. But there also were not successful. You could not maintain a balance between the government enterprises and the private enterprises. This was one problem also which you see in the development strategy of India and China. So China was more successful in terms of handling poverty in comparison to India, though inequalities increased at a higher rate in China. So there is also a comment against China that inequalities have increased in China. But China, in terms of creation of jobs as well as handling poverty, China did better than India. This is what the data shows. Some say that no, China doesn't release the exact data and whatever it is, but still 4.5 times, 5 times bigger is bigger only. Are you able to say that? You can't say that China is releasing a data which is flawed. That's wrong. Okay, so this is what you observe. Another important observation is, from 1990s onwards, India's case, we slowly started liberalizing our markets. What is the benefit of liberalizing stock markets? Raising capital allocation according to market forces will happen. What is this meaning of capital allocation according to market? So market is the right judge rather than government. Now this is a very popular saying. For example, any company like Nykaa, etc., would have got registered at a very high price when it comes to IPO. Okay, so they get registered at very high valuations. So basically, when we talk about valuation is a very tricky concept, but one ratio which talks about a value of a particular firm in the stock market, I think you should be knowing that, most of you should be knowing that, that is called as the price to earning ratio. Okay, this is basically ratio, this is basically, of course, this is not the only estimate for valuation. Valuation is something, a very deep concept, but one such ratio, which is a very popular ratio, is this price to earning. Okay, so what is this price? Price of the stock, price of the share in the market. Then what is this earnings, this is price of the stock, this is the stock price. And then I have earnings per share. Earnings per share. Okay, that is basically net profit divided by the number of shares of the shareholders. Okay, so net profit divided by the number of shareholders. The formula is not important, but what is important? If profits of the company is not increasing, okay, so earnings per share, the profit per shareholder, if that is not increasing, okay, but the price of the share is becoming 10,000, 5,000, 6,000. This is the stock price in the market. Stock price can increase because of many things. Harshad Mehta, he increased it like this. Okay, you can increase the stock price because people believe that, okay, there is this company will do well, or group of people can come together and decide, let's pump and make this company share, increase the price of the share. So you can pump the share prices, but can you pump the profits of the company or the earnings of the shareholder? Now, what is observation is earnings per share. If your earnings are there, earnings are also high. Okay, so, and in comparison to the stock price, my P ratio will be less. That means I'm getting a good company at lesser price. This is called as valuation. I have to get a good valued company at a lesser price, in simple words. Is that okay? That means in China, the problem was always their focus was not on these earnings per share. The earnings, shareholders' earnings were not their concentration from the beginning. They were concentrating on wages. If a company is running, if they have to take care of wages more, my profits as a shareholder will decrease. China's focus is not on the capitalist or the shareholder's profit. Their focus was on the increase of wages for the people. If the wages are going to increase, wages is something like my expenditure only. So for a company, if you are trying to focus on more on wages and these factor outputs, then my shareholders' profit automatically will be less. In China, the concentration was not on increasing the shareholders' profit or earnings. There it was government regulated. They were not giving all the profits off to the shareholders. It's nothing like positive and negative. Their concentration was more on giving it back to the people in terms of increase in wages, etc. So automatically my profit which I keep will always reduce. So shareholders' profit was not the most important aspect there when it comes to China. Are you able to get this? But India's case, stock markets, once they were liberalized, okay, so we had more investor-friendly policies. China never had investor-friendly policies. China was having wage-friendly policy, investor-friendly policy. So wage-friendly means you're talking about wages, increase in wages, and there are regulations on the shareholders or the capitalist, regulation. But India's case, once we liberalized our stock market, etc., we were always investor-friendly, more like US, investor-friendly, and we were working on the shareholders' profit. Shareholders' profit means my earnings per share should increase. I am also a shareholder, you are also a shareholder if you buy one share also. So our earnings per share, if it is increasing, okay, how will earnings per share increase? It is basically the profits are increasing for the company. So the net profits can decrease if I distribute more wages also. If I distribute more bonuses also. Are you able to get this? So when I say net profit can come down. No? So simple logic. No? So always for a company, the top line of the company is always what? Revenues of the company. Okay. Then bottom line of the company is what? A profit. Top line, revenues. What is the difference between revenue and income? Very difficult question. What is the difference between revenue and income? Is there any difference? Okay. Revenue from asset? No, in a business. Forget about asset. In a business, is there any difference with revenue and suppose I'm producing this pen. I sold this pen for 100 rupees. What is that? Sale. What is that? That is my revenue. Is that my revenue? Okay. Is that my profit? No. How do you say my profit is 100 rupees? That is my sale. That is my revenue. Because of the sale, I got 100 rupees. But I am spending on labor, I am spending on marketing, I am spending on advertisement, all that. This is expenditure, expenses. Okay, once I remove expenses, I get something like the gross profit. Okay, so I think you're getting my point. There may be some companies who may have very good revenues because of the sales, but their operational efficiency is bad. They spend more on marketing, they unnecessarily spend more on infrastructure, unnecessarily giving too much of salaries or whatever it is. So all this is what? Expenses, or you want to do IPL funding like Baiju. This, of course, I'm not saying it's bad, provided you generate so much of revenue. If you're not generating revenue, but you're saying, yes, Virat is wearing my t-shirt, and for that you're pushing in 195 crores, 200 crores, 205 crores, then are you able to make up so much of sales is also a question. Otherwise, your expenses are increasing and your revenues are not increasing. That means though you have your top line, your bottom line is bad. Bottom line is profit. The whole logic of doing business is what? That's all. Don't tell anything else. There's only one answer for that. Generating profit. That's it. There's nothing other. There's no other intention of doing business. If there is any other intention, you're bound to fail. Got the point? Any other intention? No, you say, uplift the world. No. Means that in the process, the world will get uplifted if you are making profit. Automatically, you're adding value. But the thought process itself is, what is this thought process? This is capitalist thought process. Got the point? This is not a socialist thought process. But suppose if government says, so much of your money should be going in the form of wage. You are regulated with respect to how much wages you spend. Then automatically the profit share which they get has to come down. So either you are making the benefit for the shareholder, or you are focusing on increase in wages by coming up with certain controls. Are you able to get what I'm trying to say? So that means my shareholders' profit or earnings per share, okay, that is net profit to the number of shareholders, right? Earnings per share it was not the concentration of China. Never they focused on that. But India, yes, this is. Now what is the problem last 1-2 years? In India, you have high PEs, overvalued you call it as. Companies are overvalued means what? You are paying more and more than the intrinsic value of the company. Company value is X, you are paying 2X for the stock. Okay, that is called, Warren Buffett talks about this, no? Intrinsic value of the company. Check the companies, good companies at lesser price. Invest in those companies and forget. This is what is Warren Buffett. This is called as value investing. Check for value investing. That is what the definition of value investing is. Find for valued companies which are available at affordable prices and put the money there and forget. Don't check anything else. That is his logic, of course. I'm not saying that's the right logic, but that is how he did it. Now, what is it? High valued companies at lesser price. High valued companies at lesser price. But in India, overvalued now. Indian market is overvalued. Overvalued means less intrinsic value, but you're paying a premium for the share. This is called as overvalued. Undervalue, overvalue. I think this is clear. Is that okay? Now, India's case, why did our wages did not increase? Very simple observation. This is again going back to our discussion. We have discussed enough in the previous discussion. Why our wages have not increased? One is stagnation with respect to very simple logic. This we have already discussed. We have discussed in detail in the middle income trap. But just for observation here, why our wages or incomes have not increased? One is stagnation with respect to agriculture. That means there was no occupational transition. 45% of the population stuck with agriculture. Problems of disguised unemployment. Issues of labor productivity. So if the labor is productive only, then only incomes will increase. The productivity from the beginning was low because of multiple factors what we have discussed, like skills and other aspects, etc. Then abrupt, of MSME. Okay, so this is basically failure with respect to manufacturing sector. So in this manufacturing sector, even our tax policies were also a problem. For example, after 1990s, we could see some problems like negative protection in our tax policies. Negative protection. So earlier, protectionism. Then it moved towards negative protection. What is the negative protection means what? Indirectly you're protecting the foreign player at the cost of Indian player. This is basically when your taxes like countervailing duties. Heard of this? What is the purpose? What is this countervailing duty? Okay. Anti-dumping is different, no? What is this then? Very good. Okay. So this is basically a duty which you are levying to counter excess subsidies given by other countries. Suppose if I say CVD, why is the CVD levied is some foreign companies are giving higher subsidy. This is one. But those companies which are producing products in India, they are paying for domestic production, they are paying huge excise duty, domestic production. Okay, so 12%, 13% excise duty, but CVD is less. If CVD is less means indirectly you are benefiting the foreign company against the domestic manufacturing company, somebody who is producing the product in India. He is disincentivized in comparison to the foreign player. That is what is negative protection. That means even taxes can have an impact on manufacturing. Okay, so then in India after 1990s also, inverted duty structure. Inverted duty structure is again something like, when I want to produce a product in India, you're producing a product in India. Suppose, I'll give you an example better. I'm producing this pen in India. I want to produce pen. The raw materials required for producing the pen, when I'm importing these raw materials for producing this pen, the duty is higher than importing the pen itself. The duties are lower when I'm directly buying the finished good. I'm buying the pen, the duties are low. But when I'm buying the raw material required for producing this pen, if the duties are high, what will happen? Will I have incentive to produce in India? I'll not be having incentive to manufacture in India. Better I will import. Now automatically you're disincentivizing manufacturing or local manufacturing. That means, is that okay? So if you want to promote production, manufacturing, your taxes on raw materials used for producing this pen should be lower than the taxes on the pen if I am importing, the final good. So automatically I'll have more interest in producing the pen within the country. I think you're getting my point. So that means even taxes will also have problems. Similarly, labor laws. Labor laws. Okay, so labor laws. Then regulations of the government. This is about the IPR policies and other aspects. Okay, other problems are also there. Many problems are there. Lack of infrastructure. Our SEZ model failed. We adopted SEZ model from China only, Chinese EPZ model. Is that okay? Special economic zones. Okay, then we came up with NIMZs. Okay, manufacturing zones. That also was not so successful. So there is a clear observation, and we neglected labor-intensive manufacturing, unlike China. China was into labor-intensive manufacturing, like footwear and other things, where more labor is involved and it was taking the benefit of the labor. So because of that, labor force participation was higher in China. But in India's case, from the beginning, our growth model itself was capital-intensive growth. Capital-intensive means machine-driven growth. Heavy industry, Nehru Mahal Nobis. In China, labor-intensive, initially more focus on footwear-like industries where more labor is involved. So LFPR in China was always high. But our LFPR, even from the second 5-year plan, when you focus on capital-intensive growth, machine-driven growth, labor participation was less. Then how will labor incomes increase is also a question. Are you able to get this? So our growth model itself was capital intensive. Are you able to get this? So many problems are there with respect to our manufacturing sector. Okay, so is this clear till here? Yes. So now main problem is agriculture. That means manufacturing sector, our incomes did not increase or the productivity was less. Even after 1990s, then why is it that the manufacturing sector did not develop? Why there was a jump into services? Because infrastructure, policy issues, tax related issues are there, liberalizing labor laws related issues. Okay, the regulatory mechanisms, we use the words like regulatory cholesterol. Regulatory cholesterol. Today the problem is lack of easy exit also. You set up a company, I am not able to run it, I want to move out. No, very difficult. Closing also is difficult. Opening was difficult earlier. Now moving out is difficult. This is called as lack of easy exit. So like this, if you see, there are n number of problems in our manufacturing. Then manufacturing MSMEs failed and other things. Is that clear? Okay. Then, of course, the regulatory bodies did not develop. All the regulatory bodies learn through experience. So without strengthening the regulatory bodies, you said FII into the stock markets, liberalize the markets, stock markets. So what will happen? People like Harshad Mehta will come. There will be erratic falls in the stock market because of scams. Got the point, right? So always the institutional structure should be developed. So we from the beginning said we will focus on institutional. Our growth was institution-led growth from the beginning. But our institutions were not strengthened from the beginning. And one more thing is SEBI or regulatory bodies were also not that efficient. Over a period of time, we have become efficient. Okay. Then if you observe, we failed in terms of implementing our second generation reforms. Heard of this? After 2000, we have come up with these reforms. It deals with factor market reforms, labor sector, legal reforms, law. Okay, so bringing in changes with labor laws, all these are legal reforms, factor market reforms. There also there's a failure. This is also a reason why China bumped up faster. 1999-2000 is second generation reforms. We failed in implementation of second generation. That was a period when China was very fast. Are you able to get this? Okay, so that is the reason you find China growth at a faster pace. Till here, I think it is clear. So definitely there are issues, obviously. That is the reason. Okay, so basically China's investment to GDP ratio has been consistently high, around 40% from 2003 to 2011. This is a very important factor. From 2003 to 2011, China's investment is higher. India's investment during its high growth phase was around 33%, lower than China. This suggests China has been allocating a large proportion of its economic resources towards investment or capital formation, which has contributed to its faster economic growth. We realized in 2018, when we said for $5 trillion, we will again come up with investment-led growth. But here again, if you observe the gap, so from 2012 to 21, the gap between China and India's widened even more. When China's investment ratio was averaging around 43%, India's went down to almost like 29%. That means between 2012 to 21, our investment capacity or investment to GDP, investment ratio has come down. Are you able to get this? Okay, but Chinese ratio is almost has increased. If you see from 33 to almost like 43, then growth, they will grow, no? You were not investing. Okay, so then the first stage itself, forget about infusion. Okay, so proper investment and infusion, China was at a faster pace. That is clearly visible with respect to their manufacturing efficiency. Is that clear? This is one more important data point. So why India lagged behind? Of course, India also had some more problems here. Like we had problems like high current account deficits and fiscal deficits. China generally trade surplus. India's trade generally we have trade deficits. And this current account deficit was also creating trouble with respect to our rupee value fall. And this rupee value fall was also increasing my imported inflation. We are importing raw materials. For example, most of our manufacturing sector runs on imported items. And though whenever rupee value depreciates every now and then, our imports were increasing. But at the same time, we were not able to maximize our exports. Why? The imported raw materials, when I'm using, our manufacturing is running based on imported inputs. And my inputs are becoming costly because of rupee value fall. Then my cost of production will automatically increase. When the cost of production increases, my exports will not be beneficial. Exports will not be okay, though my rupee value falls. My cost itself is increasing. So the benefit which I'll get because of rupee value fall is also gone because of increase in cost of production. Why cost of production was increasing? One, inefficient technique. Is that okay or you want me to draw it? It's okay? Understood? Okay, so inefficient production techniques is one. Second is raw materials you are importing from other countries. India is not self-sufficient, you are buying. Then the credit expansion in India has become a challenge, especially between 2011 to 16. This was because of problems like NPAs with the banking system. Now it is okay to some extent, you don't have the problem of NPA. Along with NPAs, we had the companies not doing well. We call it as twin balance sheet syndrome problems. So banks, corporates balance sheet was getting affected, because of which banks balance sheet was getting affected. And because banks balance sheet got affected, banks were not interested to give easy credit. That was again going against the growth prospects. Because India's case, that point of time, our bond market is still not developed. Today at least now bond market is developed now a little. So when bond market is not developed and the banks are reluctant to give loans, then expansion, capital formation will get affected. Is that okay till there? Understood? So everything will affect the incomes of people, wages of people, disparity in composition of exports and imports. This is basically deficits. And most of the time our exports, we are not exporting high technology products. How many mobile phones are we exporting? How many cars are we exporting? Okay, so we are at the lower end of the value chain when you are talking about export. The value addition is less. Your margins and profits will be less when you are in the lower, when you are operating in the lower ends of the value chain. I am exporting rice, my margin will be less. When I am exporting basmati, it will be little higher. When I am exporting a computer or a machine, then my margins will be even more higher. So this is one big problem with respect to our exports and imports. So your margins are less means, your profits are less means, automatically your incomes will also get affected. So everything is interlinked. The wages, income is what? Wage. Okay, so that will also have an impact on wages. But China has started becoming more and more export competitive, not at the lower levels. Even value addition they started picking up. And high valued products they started exporting as well, along with normal. They were focusing on both. And that is how the margins increase. When the margins increase, incomes increase. Incomes increase, wage will increase. Okay, so how did China with government's interference or the public control, government control, they have built the ecosystem. Okay, it was regulated. Though it was not, stock market was not the most important thing, but government entities were able to do it. Are you able to get this? India, that was not the case. Okay, so then China has higher labor force participation rate. As I mentioned, growth model initially was labor intensive in China. The industries like footwear, etc. Everybody thought India will occupy that position because China has moved out of that #1 position in labor intensive sectors like footwear. Because in China the labor cost started increasing. So they lost the #1 position in these labor intensive sectors. But everybody was thinking India will come. But India, it's not India, it's Vietnam, it's Cambodia. Okay, so Ethiopia, these countries are picking up. Bangladesh also picked up a lot. Okay, so they are picking up, but not India. Okay, lack of employment generation. This is one big problem. This is what we could see from the beginning in India.
Prepare for CSAT Prelims 2025 with confidence. Vision IS brings you a comprehensive CSAT classroom program 2025 designed to enhance your problem-solving abilities, analytical thinking, and time management skills. Master critical areas such as reading comprehension, logical reasoning, decision making, and basic numeracy with our expert faculty from Delhi. Access the advantage of regular practice through mini tests, tutorials, and the All India CSAT test series to sharpen your skills. Starting 20th November at 1 p.m., choose between offline or live online classes, giving you the flexibility to learn on your terms. Don't miss out on this opportunity to elevate your CSAT preparation.
Till here, is that okay? No, no, it's not that India is, we now see it's already too late. The question is, you have to catch the bus at the right time. This is the problem, no. So, of course, this is also a problem. Catching the bus at the right time is very important. See, what the problem is, yes, now 2018, 19, this was a period of what? COVID. Okay. And globe is moving towards deglobalization. Globe is moving towards protectionism. Okay. There is impact of COVID and high inflation because of excess money being pumped by countries like US. Okay. So, in this scenario, now you want to focus on investment, but your strength is consumption. Now the question is, can you really focus on investment when the circumstances are like this and maximize your output is the question. Okay, rather than that, is it better that you make for India rather than making it in India and selling it abroad? And why can't you make for India and focus on your strength, that is consumption? Because countries like China and South Korea, Japan also, they are facing trouble with respect to exports. That was the period, 1920. And during that period, you are saying investment-led growth may be difficult for India. This is what economists like Raghuram Rajan were saying. The reason being very simple, it is also the conditions in which you are operating. Same thing, no. See, when I'm taking something, a policy decision, it should also be based on the internal and global factors. You can't say, I will take this decision. Okay, so under what conditions are you taking a particular policy is also very important. Of course, investment is very good, but how? And at what period of time? What time are you going to do it? This is also very important.
So that's why that China's economists that they think the foresightedness of the society.
Is it economists only?
Is government or economists both?
More than economists, it is government. See here, economists may have ideas, but the reality comes into picture only when you come up with a particular model. But at the same time, you can't say Indian model is not sustainable. So even today, investors believe that India's model can be sustainable in the long term. Of course, I'm not saying India is better than China, but what I'm trying to tell you is, you can't say that India is not in the race. Of course, we are way below, no doubt, but India is changing its methods. This is what I can say. So it's not, the only thing is, China, whenever it takes a decision, it's very firm. For example, China says, I will not privatize insurance sector. Suppose China takes a decision, it will never change irrespective of finances not coming in, irrespective of any other problem. But India's case, we are not like that. We generally oscillate between policies. For example, we want money, then we will go ahead with privatizing LIC also. I'm not saying it is right or wrong. What I'm trying to say is, you are not so firm as China with respect to certain policies. But in China, when you say firms have to be regulated like this, the conditions are like this, they are regulated like this. Okay, but India, that is not the case. Okay. So both operate in a different, each one has its own advantages. Is that clear? Yes. So exports, what fueled Chinese growth? Export and capital spending. This is one that has fueled Chinese growth. Domestic investments, high domestic savings rates initially fueled the infrastructure. State-owned enterprises, see this. This was not there in India. Of course, state-owned enterprises are there. But profits from these enterprises provided fiscal benefits, reinvested in physical capital, leading to a high investment to GDP ratio. Our companies were making losses only, most of them. PSU-led growth. Most of the PSU companies were not doing well. Laid back attitude, government's interference, corruption. Of course, China also corruption is there. I'm not saying it's not there. Got the point, right? Challenges with efficiency. Despite high investment, there are criticisms of inefficiencies such as construction of ghost cities and overcapacity in electric vehicle sector, indicating not all investment yielded high returns. China also has troubles. There was a situation in China where recently, deflationary situation in China. China was struggling. But now China has changed its policy. I'll talk about that after some time. Okay, so the problem here is China also failed. There was situation in China where they've constructed big constructions in Shanghai, Beijing, but people were not there to occupy. Their incomes were not there. So there was situation in China where all their investments did not work. All their investments did not lead to household income growth. So it is, but compared to India, definitely most of the cases they have done it better. And it was, you can see the capital formation was state-owned enterprises have done it profitably in China. Is this okay? So these are the reasons why China did well. And one more problem, India always faced problems of trade deficit. China has generally trade surplus. India's problem is this also. Then China's investments are largely fueled by state-owned enterprises and high domestic savings. In contrast, India's investments rely more on foreign capital and lower domestic. This is the situation now. So currently our savings are dropping. Okay, so our capacity to save is coming down. Now you know banks are also facing liquidity crisis. Deposits are not coming into the bank. In fact, people's consumption capacity is coming down. Savings are coming down, consumption is coming down. Means situation is not okay. But growth forecasts are okay. Everybody is saying India will grow more than 7% only. Got the point, right? So that is all. Government spending. A significant portion of India's savings is consumed by government expenses like pensions, salaries, which differs from China's reinvestment of state-owned enterprise profits into further physical capital development. So the revenues which I generate or even disinvestment proceeds, if you are putting that money into welfare, which is not going to create output, GFCF, China's profits are pushed back or the money is pushed back into creating gross fixed capital formation. Here it is not happening that way. Private sector, unlike China, India's industrial expansion is more dependent on private with limited state-owned enterprises influence. Madam also mentioned, government has no business to stay in business. Good only. Because government was inefficient. If government is efficient, why will we say we don't want government? There should be PSU. We can't give all the ports to one organization. One private organization. Got the point, right? All ports under one control. And now corruption charges are also there. Of course, not proved. But why? Better government holds few. What is the problem? Government can also hold few. This is basically holding control. Now see here, there is this data. Now current situation. What is the current situation? So let's try to understand the philosophy in China. The philosophy in China is something like the richer people in China, they were not investing in stock markets. They never invest in stock markets. Primarily their investments were into real estate and properties. More than 30-35% of Chinese investments are in real estate and not in stock markets. Reason being very simple. The reason being the Chinese stock markets are very, very abrupt or not stable. The graph, if you see, it's like, it goes like this. Goes, comes down, goes, comes down. There are many reasons for that. As I mentioned, last 20 years data, China's growth was in stock market is -13, India 1300 plus positive. This shows China's returns. China never focused on investor or earnings per shareholder. You're more interested in wage or distribution. You're not, increasing shareholders' capital was not your logic. That is not their focus. Moreover, most of the companies listed were government companies in China. Government company. And listing is also easy for government companies. They'll regulate. A government company comes up with IPO, easily it gets listed. Private fellow wants to come up with IPO, he will struggle. Regulations are very high. So stock market is not so. So in Chinese, from last 30 years, if you talk to a Chinese investor or Chinese people, they say, a stock market is gamble. So that means the last priority for them. That was not their prime most priority. But after 2010, Chinese banks started giving margin funding. You know what is margin funding? If I have 4 lakh in my account, I can invest 8 lakh, 10 lakh. Bank is giving me loan. You can do it now also. Every day that is possible. Banks immediately give you loan. So I have 1 lakh in my account, but I can invest up to 4 lakhs. For that 3 lakhs, bank charges interest. You have to pay that 9.8, 10% per annum. And if you lose in the market, that is also gone. So that margin, this made China, people started suddenly moving towards markets. Asset prices increased in China. But otherwise, that is how Chinese growth started in the stock markets, because of all these reasons like margin and all that. Now, one more important observation. 2008, when US went ahead with quantitative easing. Heard of this? Why did US go ahead with quantitative easing? To move out of crisis. So, quantitative easing means US was funding or US was pumping dollar money into the markets. The problem with pumping money into the market is China never liked US quantitative easing. China never liked. Why? Why China wouldn't have liked a quantitative easing? Not withdraw investment. That money will not be in China only. That money in US only. That money will enter India. That money can enter India. That money can enter US. There are through FII investments, through hedge fund investments. Hedge funds are, you can invest in every country possible. FII investments, you're getting easy cash. No, that money is not with US. That money is increasing the asset prices or inflation in other countries also. But who has the control over that money? US. For US, it is internal debt because it is dollar. But for others, it is not their currency, no? It is external debt for others. So much of money coming into the market, it will increase my inflation, increase my assets. This is how quantitative easing of US was not completely liked by China. It will lead to inflation. After quantitative easing, US stock market started doing well. After any kind of quantitative easing, markets do well. Why? People have cash. Not just stock market. Real estate does well. Why? There will be increased demand because of infusion of money. You can buy real estate, you can buy stocks, you can buy house, whatever you want to buy. So the asset prices start increasing. That means quantitative easing in US has increased the inflation across the globe. Are you able to get this? Same thing US has done in 2020. Irresponsibly, US has minted money to handle COVID. You should be responsible because your currency is a liquid currency. But irresponsibly, US minted money, which increased the inflation not just in US. We all faced inflation problem. The globe faced inflation problem. Then started monetary tightening. Yes or no? We increased our repo rates. Every country increased, including US. In US also asset prices increased. Because of the quantitative easing it followed, or these easy money policies which it followed in 2020. Now because of all that, the prices started increasing across the globe. But US can control because US can mint that currency if it wants. But what about other countries? They can't mint dollar, and that means it is external debt for most. You can't control it, but US can control. US indirectly is controlling the world. Are you able to get this? Now China did not like this. Then in 2021, the property prices in China slumped after the COVID. There was a problem. So the real estate investors, already stock market in China, they will not invest. And they were investing in real estate. And that real estate also, correction, went down. So now these rich people, they started putting their money in Malaysia, US, European countries, buying properties, etc. Now the Chinese government felt our investors, our money is going out. They are making other countries bigger. They are investing elsewhere. And they are not investing. They are not staying back with us. They are thinking of other markets and they don't have options. Something has to be done. This is the thought process. And from that something, logic, Now China is thinking of right now, this is what is happening. It's trying to liberalize its stock market. This is what they are doing now. How are they going to liberalize now? China has issued bond. Now suddenly you find the Chinese index increased almost by 4% in one day. This is never seen in China. 4% is not easy. Our Nifty increasing by 4%. Like that, if it jumps, then it is not an easy thing. Are you able to get this? Why China is liberalizing? Now China has issued $100 billion bond purchase program. That means China decided to infuse money into the economy. This is like the quantitative easing. You follow, we will show how we can do. We will also do it. $100 billion bond purchase program China has announced. Because of this reason only, investors are leaving India. Foreign institutional investors, and they are running to China now. Are you able to get this? Now, what does it mean? China's $100 billion bond purchase program. So, what does it mean? It is something like China is buying bonds and infusing money, like the quantitative easing. Quantitative easing is what? Bond buying program. $100 billion money being infused into the economy means it will increase the asset prices in China. Which all asset prices? Real estate, share market also. So that these rich people, investors, first thing, they should not invest elsewhere. Invest in our real estate, invest in our stock market. Now we'll not control, we'll reduce the regulation. Now it is an opportunity for us also to think about Chinese market to some extent. You can also invest in ETFs and other things. You can invest in Chinese market. Okay, so why? Because two reasons here. One is China has come up with such a kind of $100 billion bond purchase program, which is not it's a big thing. Okay, now the question is, every country will ask, how can you infuse so much? What is the guarantee you have? Do you have so much of strong balance sheet? Does your banks have that? Your federal bank or your main bank has so much of balance sheet strength to push so much of money into the market. So that is the reason last 2.5 years, China was consistently buying assets and gold. It was acquiring asset and building its balance sheet. And once it has built its balance sheet now China is doing this. Got the point? No. If you're buying bonds and infusing $100 billion then they'll ask, no, what is your, how can you, they'll see the balance sheet. This is the strength, this is the asset backup I have based on which I'm issuing so much. And they have built assets in the last 2 years very efficiently by buying gold and other structured assets, build the balance sheet, and now they are doing this. Is that okay? So now the asset prices in China increase, liberalizing the stock market so that people will think of Chinese stock market. And now Chinese valuations are far better than India now. Indian market is overvalued, means our P, price to earning. Our P ratio is higher, means we are overvalued. We are paying more, or we are paying a premium to stay in India. There now valuations are decent. Still they have not pumped up. No, Chinese market is still not pumped up. So now the company's valuations are also decent now. So therefore they are better valued because of the P ratios. Now P is 1. Now that is the reason these FIs from last October continuously they are selling in India and they are going. Because they are confident that after 2008 quantitative easing, US stock prices increased. Similarly, after this program, monetary stimulus, Chinese market will also do well. Moreover, valuation is also decent. I am paying less to get the same asset in China and I am paying more to get the same asset in India. So better sell in India, go to China. This is what they are doing right now. I hope it is clear. Understood, no? So same in US. China opposed money printing power with US. This I've mentioned. For China, it is external debt, as I mentioned, because it's not your money, basically, but it enters your market. US injected money, global inflation. US was irresponsible. US investors were regulated to enter Chinese stock markets, control equation. See, earlier China regulated investors, FI investors also, into the stock market. Why? Because it did not want to lose the control. and China was controlling the markets. And that is also one of the reasons the stock prices, earnings per share in China did not increase. They were regulating FIs to move and hold the assets in China. Is that okay? India, it's not like that. You allow them, no? They are holding control. They were controlling the control. They wanted to control it, basically. Government wanted to control it. So FIs were also not allowed. Now they are slowly pulling off that. Okay, so now they are liberalizing the stock market. China creates its own money printing system. That is what it has done. And China was also building its balance sheet by buying gold and increasing forex. It has built buying dollars and other things. 2 years it has done this work. Homework has been done perfectly. Gold has been built. And then bond, fiscal stimulus. US quantitative easing, we will also do. Not only you. So, can you buy means you can also buy, provided you understand Chinese market. Okay, so new quantitative easing policy of China to liberalize stock market. This is what I mentioned. Shift from real estate now. So this is basically not just the real estate or assets now, because the real estate is not doing well. They want to also focus on this. Can it affect Indian and US market? Obviously, yes. It is affecting, no, already money is going there. So is it affecting means yes, it will affect flight of capital from India. Now Trump policies again, we never know, Jan. So if the policies are even more tricky and China devalues its currency to increase its exports, again the situation changes. So this is how, these are called as global headwinds. It's not like Indian economy cannot be read in isolation now. Okay, so you see Indian macro economy is affected by several other factors. And in this now you have to increase your income and capital efficiency. Not easy. Got the point, right? Okay, and moreover, the systems are also not in place. Okay, so this is how we are running, and I think you have understood this. Okay, that's all then. I'll stop here. Done. Thank you. Yeah. Middle income trap is very important. And my intention of talking about this is to make you understand the macroeconomic dynamics. Got the point, right? So overall macroeconomic dynamics, when I understand, I can write. Specifically, they may not ask. Middle income track is definitely important. No doubt about it. It's completely important. But you may say, sir, what is important? Last 3 pages, are they sufficient? Yes, those last 3 pages for writing a 10 marker should be sufficient. But those graphs are not important. That is to create an understanding how it works. Got the point, right? So you need not remember all the graphs. But once you understand that, you will write, the points will flow. That is the only thing. Middle income trap is very, very important. Understanding macroeconomic dynamics of India is very important. Because anywhere I will use it. Suppose if there is a question on growth pattern or how India's economic growth is going to be, what are the factors that will affect my growth or inclusiveness in India? So such kind of questions I can pull out points from here and there. But specific question on Chinese stock market or Indian stock market in mains will never be asked. But the point, we have to be very clear. Who will ask valuations or PEs? No, this is just to understand it's overvalued, undervalued. That's it. Maybe they may ask the word called as value investing, if at all it comes in newspaper consistently. Otherwise, no. So specific question expecting on Chinese market, no. But global economy and trends, there it is. That is very important.
What type of question will be coming and how to consolidate into proper points?
No, macroeconomic, it's a story. For example, if I talk about middle income trap and how do you come out of middle income trap? Okay, so suppose this is the question. So is there an impact of India's factors or the local factors? Yes. Is there an impact of global factors? Yes. So both these factors play an important role with respect to middle income trap. Similarly, if I talk about questions saying that, suppose there was a question asked earlier, for example, decent GDP growth rate and stable inflation, does it indicate that Indian economy is in good shape? So this was a question that they have asked in UPSC. That means the question says like, if your economic growth is good and your inflation is stable, does it indicate that economy is in good shape? Or for the economy, is it like something else is required? In fact, what we have understood is growth is only one aspect. Okay, so today that is what we have understood. Or inflation is one aspect. There are many other factors really to focus on my GDP growth. And if I really want to focus on my per capita incomes or my GDP per capita, there are several other indicators or factors that will affect. This is the question. So if I know these, probably I can take the alter stand like these two are not sufficient. There are many other things that can impact an economy. So this is how the questions on a wider scale. Similarly, if there is a question on the role of labor productivity, there was a question earlier like the question exactly I'm not able to recollect, but the question goes like this. In India, the growth process was supported by labor productivity. Okay, so in India, growth process was supported. Come up with growth models which will help in increasing growth without compromising on labor productivity. Come up with growth models which will help in increasing my GDP growth without compromising on labor productivity. So now you have to increase growth without compromising on labor productivity. Obviously, infusion, innovation, all these are points to increase labor productivity without compromising on growth. Only factor accumulation will not increase productivity. Are you able to get this? Okay, so factor accumulation is you are increasing output. Then how do you increase productivity then? Without compromising on growth. Your growth should increase along with my labor productivity. So your growth model should focus where? This was the question. So my growth model should focus on what? Shifting from primary to secondary, shift the labor, then creating jobs in manufacturing. These are all known points. Manufacturing, focusing on MSME, focusing on labor intensive manufacturing, occupational transition, all that. Okay, so, but the new points which I can think of, probably from the discussion, would be something like labor productivity is dependent on other factors which you have discussed. Okay, so all that plays an important role with respect to labor productivity and the link between labor productivity and the capital output ratios. Okay, so this is how you have to look at the answers. Okay, so, but specific question on market, Chinese market, Indian market, nobody will ask. That's for sure. Because capital markets is not for mains, it is only for prelim. Got this? Understood? Yes.
Yes, sir. Like that, like USA doing quantitative easing after 2008, and India is also getting free money, and China will.
India is getting free money.
Yes, sir.
Okay.
And China building their own capital or just buying the bonds, and like that if the quantitative easing is stopped, like in our economy that there is small industry or MSME, and after that they get stop they funding their funding is stopped, that the what's the economy after that, what happen in the economy, sir?
If the funding is stopped.
Yes, sir.
First of all, India is not stopping funding, number one. Number two, funding should be stopped for whom is the question. Funding should be stopped for non-productive MSME. That is, nobody says funding should be stopped for productive. So in spite of taking money, your productivity is not increasing, or you're operating like a dwarf MSME, then the funding has to be stopped. Don't indiscriminately give your subsidies for those MSMEs which are not doing well, not performing since last so many years. So this is what is the logic. But it is not like stop the funding immediately. That is not the case. Stop the PLI immediately. That can never be done in India. So over a period of time only you will be able to do it. But you can reduce your subsidies which you are giving to non-performing MSME. That is the whole logic. Okay, so it's not that you reduce the funding. No, that's not the case. Okay. That's all? Okay then. Thank you.